Hello and welcome to BQ Prime. You are joining us on this earnings conversation with Mr. Angshu Mallick, the MD and CEO of Adani Wilmar Limited. The company has just announced its quarterly results this afternoon. Let's do a quick recap of the numbers. Revenue is down 13% at about 12,267 crore. EBITDA is down 43% at 143.7 crore. Margin at 1.8% versus margins at 1.2% versus 1.8% a year ago. And the company has reported a loss of 130 crore versus reported profit of 31.9 crore a year ago. Now, this is mainly on account of the lower edible oil prices that we are getting to know. Now, Mr. Mallick, thank you so much for taking out time. I would like to begin by asking, how do you assess the quarterly numbers? Has it met your expectations?
Quarter two has been good from two, three fronts. One is that edible oil volume, although overall volume grew by 5%, the branded packed edible oil sales, which is of more importance for us, grew at 12%. Second is the food and FMCG business, volumes grew by 20%. In spite of having restrictions in rice exports, our domestic market grew at 50% year on year, but overall it grew by 19% because rice exports were banned in some of the categories, and in Basmati they had put an MEP of $1,200. When it comes to industry essentials, we grew at more than 23%, and that is mainly on account of oleochemical business doing very well, castor oil business doing well, and soya and rapeseed meal doing well. So overall, if you see on volume front, we did 13%. And the first half we did roughly around 23%. So volume-wise, surely very good. On bottom line, let us understand that there has been one-time loss of around 53 crores in edible oil for the entry tax. We paid to the West Bengal government. That was a scheme under which we had cleared it. So it is a one-time issue. Second is that the hedging disparity or the conflict of hedging and then the domestic market that did not support Q1 also and Q2 also, and this type of things don't happen normally. So in hedging we did lose on that, but going forward that pain is now gone, where the India disparity market has now come up, and international the prices have cooled down. So overall hedging losses going forward does not look like, and October onwards we are surely out of that problem, that pain. That pain was there in Q1, continued in Q2 at least up to August, and that is where the things are. Otherwise, food and FMCG business has made positive EBITDA, and both oleochemicals and castor.
All right. So in terms of the revenue, we see that the lower edible oil prices did have an impact, like you mentioned. So when do you see this kind of bottoming out? With the prices when it comes to the MRP, the revenue growth and the volume growth to grow in tandem. When do you see this?
See, the revenue drop is mainly on account of edible oil prices coming down. In food and FMCG, actually, it has grown up by almost 20%. But in edible oil, which constitutes a major volume, obviously the international prices have come down, and that is why you have seen that in India, the edible prices are low. And accordingly, the MRPs have been reduced in line with the international prices.
Okay. So coming to the food business, we see that you are aggressively scaling up this business. But at the same time, a lot of players are highlighting the renewed competition from the local players, the regional players that are gaining market share. So have you kind of lost any share, or is it otherwise for you? Could you give us a split category wise to understand the picture better?
See, let's take, say, wheat flour category, atta, which is a big category. Obviously, we are number 2 player, and our market share has increased. We do have competition from national player as well as the local players. But Since the brand fortune is very strong, number one. Number two, we have a distribution advantage that takes us to both urban and rural. And because of the edible oil distribution, we have inroads to more than 1.6 million outlets. So obviously, that is a strength to us over the local competition. So we are stronger than the local competition. Second, consistency in quality is very important in this business, food business. So we have that strength to buy timely the wheat, rice, and all that, store it, and then process it over a period of time so that we give consistency in quality. So all this makes AWL different than the local players. And so each of the categories, whether it is rice or wheat flour or pulses or besan or poha, we have been ahead of them.
Okay, and any new categories that you're looking to enter?
Mm. See, we entered Poha around 8 months back. Poha is now doing well. It's almost a 5,000 ton category for us annually and is growing at more than 20% per annum. We did launch Kohinoor brown rice and Kohinoor biryani kit. Now, Kohinoor biryani kit is available in India and Fortune biryani kit outside India. Now, that is doing well and is clocking more than 60,000 pieces a month. So that is also important category for us, which we can grow and we can add more varieties and variants in it. Other than that, we are working on few other categories in home and trying out before we launch them.
Okay. In terms of the macro environment, the festive season is underway. I would like to know from you, how is demand looking like at the moment? If you can just help us understand the picture.
See, normally, second half of the year, the consumptions are always better than first half. Now, primarily two reasons. One is that festive season, and second is your marriage season. This year, there is very heavy marriage starting 15th November. And marriages now are very big in scale. More number of people participate and more number of guests are allowed. So there is no such restriction. So out of home consumption increases much more than H1. We are in basmati rice, non-basmati rice, edible oil, wheat flour, rava, suji, maida, atta, besan. All these products are required in the out of home consumption. So for us, H2 is always important, and our Horeca business is also doing much better.
So this is also in sync with the rural demand. Like, are we seeing the similar pace of demand in the rural, or is it different?
See, we have seen normally the winter is a better demand for rural because one October, November, the new crop comes in, so there is a good amount of money in the hand of the farmers. So rural population has more income at this point of time. Then there also expenses increases because of the festivals and all that. And the next sowing is only in after October. They have next crop coming in March. So this period between October to March is considered to be a bigger consumption period for rural markets. Our products today, we sell almost 30% of our products in rural. 70% goes to urban. So in rural, we are finding better traction than urban. In the last 2-3 months, we have seen that. But normally, September, October onwards, it happens.
Got it. So, every time we have spoken, even in the past, you did mention about leveraging the overseas demand for the packaged food segment. So, I would like to know, what is the current share of exports to your overall revenue, and also how do you plan to build up your exports business?
Overall exports that we do is around roughly annually around 4,500 crores, which mainly constitutes of oleochemical products, castor oil, derivatives, rapeseed meal, soya meal, and basmati rice, non-basmati rice, then branded atta, branded edible oils, all these products put together. But we have put our brand now is available in more than 50 countries, and we are exporting them small or big, but we are managing to export good quantities to our distributors abroad. Even in US, we are sending stocks. So overall, I think the Indian diaspora, we are targeting them with a range of our products.
All right. So my last question, I would like to know on the margins. When do you expect the margins to normalize?
See, I think the hedging losses or disparities and all that is now gone. Uh, Going forward, this type of anomalies I don't think will come. And going forward, October onwards, it looks we are back in normal. The way we were performing earlier, we will continue to do that. I think better than that, because one,
Okay.
our food business has now grown in volume, so it has started. It's EBITDA positive, so it has started generating money, and oleochemical business is growing fast for us, and edible oil business surely at 18-20% volume growth this year. I think we should do much better. So H2, I think surely we have gone. Our pain have now gone. We are back in action.
All right, sir. Thank you so much for your time. It was pleasure talking to you.
Thank you, Session.